Hi there. This is the story of Cerence, a company requested by a Titan member who has access to my portfolio. So every member who has a request, I'll do a video only for him. Now, if you look at Cerence, their business model is like SoundHound. They offer their AI platform. Now, let's look at the market cap, which is about $458 million, and the price $10. And now the most important question is whether the price from this level and the market cap can increase more in the future. I mean, to have a double, a triple, or 10x on your investment. And the answer to that question, you will find it in this box. So in this video, open the box and you'll find the answer here. Now, to understand that answer, you have to look at the business, what they do, and what's next, right? If you look at the revenue over the last 3 years, and more recently, the last 9 months of 2025, you see revenue in 22, 327 million, then a decline to 294 million, then a rebound to 331 million, and for the last 9 months, 2025, quite bad. A decline from 276 million to 191 million year over year. And this is quite bad. Then you look at their earnings, huge losses, but be aware for 2024, here, most of their losses contain an impairment. And for the last 9 months, 2025, they succeeded to reduce their losses to only $5 million. And this is quite good. Do you know why? Because if they become profitable on 191 million or 200 million, that will be quite great. And what I like about this company compared to SoundHound is the number of shares. Over the last 3 years and 9 months, this number has increased just a little, 49 million to 43 million. If you compare this company, Cerence, with SoundHound, SoundHound has increased the number of shares from 190 million to over 400 million. So, more than a double. But here, they don't issue that many shares. Now, when you look at their balance sheet, you understand why they haven't issued so many shares. Cash, $79 million. Quite a significant amount compared to their market cap, current market cap. But their debt, quite high, 198 million. So, they didn't dilute shareholders, but they took on more debt. This is good as long as they can become profitable and then pay down their debt. This is good if they follow this strategy. If not, and they took on more debt, and then they start issuing more shares, that will be quite bad. So here you have to watch closely. Number of shares and also their debt. Now, you also have to look at their business model. In one word, they offer, short phrase, assistance for vehicles. As SoundHound does. They offer their software, conversational AI, via license, and this represents about 54% of their total revenue. Then, connected services. Here they offer their services via subscription, and it represents 25% of their revenue. And professional services. Here they design and integrate their technology, which represents 21% of the total revenue. And the basic question is, can they grow more in the future? Well, the market for their technology is growing year by year and will increase more in the future. This is sure. The next question is if they can maintain their position. Because you see a huge decline in the revenue, and as more competitors arise, that may become a problem in the future. We don't know if they can gain more market share in the future. And this is the biggest risk. The first risk. If they can continue to grow. If not, that would be bad. And they will face competition from a lot of players, not only SoundHound, AI, but also integration from Grok, OpenAI, and Gemini. Grok is already available in Tesla cars. So be aware they offer assistance for vehicles, right? And Grok is already available in Tesla cars. And the other companies want to do the same thing, to grab a portion of that market. OpenAI, Gemini, Amazon, and so on. So you have to be very careful about competition. I mean, why would you choose Cerence technology over Grok or ChatGPT in your car? Grok is already, as I said, is already available in Tesla. And why would you choose Cerence over Grok? Tell me in the comments. And of course, other players will arise in the future. So you have to be very careful of this competition. Then, the second risk is their debt. Because if they don't become profitable, they'll continue to report more losses. And who is going to cover those losses? Can they take on more debt if the revenue goes down? No. So they might issue more shares. You have to be very careful here. And then the third risk is if they can really become profitable. Because if they can't, this will be a bad investment for you. So Cerence, in my view, right now, is not a great investment. It's not a great investment. There is a lot of competition. Even if the revenue is much higher, 300 million than SoundHound, reported only 84 million in 24. And the market cap right now is about, over 6 billion. Still, Cerence is not a great investment. If you compare their market caps, SoundHound, 6 billion, and Cerence, 400 million. Yes, you can see that Cerence is way undervalued compared to the revenue. But don't forget about their growth rate. This is all matters in the market. When revenue goes up, the market cap goes up. But here the revenue is going down. You see, the last 9 months, quite a huge decline from over or close to 300 million to 191 million. And that's why Cerence has this market cap over 400 million. So, yes, if they can become profitable, yes, they reduce their revenue, let's say only 200 million for 25. And if they're able to make a profit on that revenue, that would be great. That would be great. You value this company based on their profits. And then see if they can grow more in the future. And if they report a profit, of course, the market cap will increase and so the price. But I'm not sure if they can do that. There are low chances because of competition. So, investing in Cerence is more like a speculation. The risk is quite high. It's up to you. If you like this company, you know more about this company, have better insights. Yes, you may have an advantage. You will assume that they will get a new contract the next 12 months. Yes, you can take the risk and invest in this company, Cerence. But otherwise, I wouldn't take this huge risk. I have far better investment ideas in my portfolio. And I'm about to invest in another great company, which is Undervalued, offers a dividend, buybacks, and grow more in the future. And it's also related to software. So, if you want to achieve a return over 30%, this is my performance over the last 4 years, join my Title Investor. And there you have access to my portfolio, plus an investing course, another in-depth analysis. If you have a request for a certain company, I'll do a new video only for you, as I've done with this company. And bonus, get access to Spartan and Gladiator. So see you there if you want great returns. And that's it for this video.